Inflation is coming down, and yet why everything else is still so expensive?
We raised the appreciation rate a consecutive 5 times, which was unprecedented, and 2 of those decisions were off cycle.
Welcome to the Inside MAS podcast, where we engage our MAS leaders directly on the work of the central bank and how it impacts the men and women on the street. I'm Yan Fei, Senior Economist at MAS, and I'll be your host for today's episode, Monetary Policy in Action. Have you ever wondered how the cost of your morning coffee or your year-end holiday, or even the jobs in the economy could be shaped by monetary policy? Monetary policy is not just a news headline. It has a big part of our everyday lives. Unlike most central banks, MAS doesn't use interest rates as its monetary policy tool. Instead, we manage the exchange rate to ensure inflation is kept in check. Inflation referring to the rate of change in prices. Ultimately, ensuring inflation is low and stable ensures economic growth is sustainable. Now, behind the scenes, our economists at Economic Policy Group, or EPG for short, work to fulfill our mandate to ensure inflation is kept low and stable over the medium term, conducive for sustainable economic growth. Today, I'm pleased to be joined by my EPG colleagues. Celine, Assistant Managing Director for Economics and Knowledge Management, and Su Ping, Chief of Macroeconomic Surveillance and Executive Director for Economic Surveillance and Forecasting, to unpack how MAS does monetary policy and why it affects all of us. Hi Celine and Su Ping, thank you for joining us today.
Hi, Yan.
So maybe just to start us off, just a simple question. How would you explain monetary policy at a dinner with your friends, assuming no one is an economist?
Well, Yan Fei, I guess you can think of it as when you are shopping online for some foreign goods and services, or when you are, say, booking an overseas holiday, you would check the exchange rates because it would matter how much you would pay in Singapore dollars. If the Singapore dollar is stronger or weaker, it would change how much you would pay. So for MAS, the exchange rate is really important too, and we manage the exchange rate, but in a much broader way. This is for the Singapore households and businesses.
Maybe you have an analogy as to how MAS actually does this.
First, maybe I explain that MAS manages the exchange rate in a policy band. We can change the slope of the band, we can change the width of the band, and we can recenter the band, move the whole band up or down. So an analogy would be if you think of the Singapore dollar as a car on an expressway. MAS does not drive the car directly, but we can control the guardrails and the speed limit on the expressway. This is so that the car moves in the right direction, it moves at the right speed, and it stays in lane. So changing the slope is like changing the speed limit on the expressway. Say if MAS is trying to fight high inflation, we would increase the speed limit so that Singapore dollar can appreciate faster. The width of the band is like the guardrails around the lane of the expressway that the car is moving in. If the width is wider, the Singapore dollar can fluctuate more within the band, and the car can move more freely. If the width is narrower, then the car can move in it's a much narrower line. And finally, if we need the car to move in a different direction, we will guide the car to merge onto a different expressway, and that will give us a different desired endpoint.
That's a great analogy, thank you. I'll remember that now when I'm on the road. Su Ping, to manage inflation, it's probably a lot of common misconceptions about inflation. Could you share maybe one of these common misconceptions that you hear about?
I would think that the most common misconception is the difference between inflation and price level. I think a lot of my friends, they often ask me, they read in the reports that says that inflation is coming down, and yet why everything else is still so expensive. You also will have heard of the term cost of living. People have been talking about it. In these instances, they are actually referring to the price level rather than how fast prices are increasing. So let me illustrate with the example of chicken rice. 3 years ago, a plate of chicken rice would have cost $4. 2 years ago, it increased by 25 cents. 1 year ago, it increased by another 15 cents. This year, increased by 10 cents. So the pace of increase has actually come down 25 to 15 to 10. But that plate of chicken rice is $4.50 now. It's still more expensive than 3 years ago. So in this case, the pace of increase has come down, but the price level has gone up. Right? Yeah. So in a growing economy, it's very inevitable that there will be some price increases alongside wage increases for people to buy what they need. The key is to ensure that wages outpace inflation so as to achieve what economists refer to as real income growth.
Inflation is really important to be kept low and stable. Could you both share a bit more then about what goes into making a monetary policy decision?
MES's monetary policy decisions are really built on the strong foundation of economic data, research, and analytical insights. So it all starts with keeping an eye on global economic developments. And this is especially important during times of shocks like COVID pandemic or the global financial crisis. We want to know what is the impact on the Singapore economy. So Su Ping's teams, they will monitor how the major and regional economies are affected, and then more importantly, how the ripple effects reach Singapore.
We zoom into the Singapore economy in detail. We look at the tradable sectors such as manufacturing and shipping. We also look at the non-tradable sectors such as retail and construction. We also look at how demand or supply shock in one sector affect the other. So apart from my team, there's also another team that looks at labour market and inflation. So whether inflation is going up or down, or in the labour market, whether there are slack in the labour market or whether there's signs of overheating.
How we tie all this together is that our team of modelers, and Yan Fei, you know this because you are a modeler, our team of modelers would use macroeconometric models to simulate exchange rate and economic scenarios. The idea is to explore how the Singapore economy will respond to the various conditions. All this, whether it's global monetary surveillance or sectorial insights or labour and inflation assessments, and of course scenario modelling, all these work together to inform on our policy recommendation. After this, there will be careful deliberation by the Monetary Policy Committee before the decision is made. So it is very important that all these come together so that we are able to make this balancing act of low and stable inflation that leads to also sustainable economic growth.
Yes, Celine. So speaking of which, around 2022, I have not joined MAS back then. I recall that there were a series of tightening moves that MAS did during that time. That must have been very challenging. Celine, you must have been in the room where it all happened. Could you share a bit more behind-the-scenes insights on what happened during that period and what were some difficulties in making this monetary policy recommendation?
It was a challenging time, not just for MAS, but for central banks all around the world. MAS had to essentially decide whether the price increases we saw at that time were going to be sustained or they were just transitory. If the price increases were transitory, typically central banks would not act. But if there was the risk of these price increases being sustained and that there were what we call second round effects, the threat of second round effects, meaning that the initial price hike causes high wage demands and then further price hikes. If there were this threat of the second round effects, then central banks would have to intervene to ensure that the higher inflation doesn't get entrenched in the economy. We had already earlier on in October 2021 raised the appreciation rate of the exchange rate. And at that time, I recall vividly there were many views among the economists on whether we needed to appreciate further. And the Monetary Policy Committee, at that time chaired by now President Daman, they expressed their view, which was correct, as it turned out, that MAS needed to continue to be preemptive in its fight against inflationary pressures and continue to appreciate further. In fact, we raised the appreciation rate a consecutive 5 times, which was unprecedented, and 2 of those decisions were off-cycle, meaning that they were not scheduled. We have kept the policy band on an appreciation path in the 4 years since, and we believe that this has helped contribute to inflation coming back down to a low and stable rate.
That must have been a very intense time. Su Ping, if you could share a bit more, since you are looking at this every day, turning to current events, we do see that the recent global developments in tariffs as well as the geopolitical tensions that's happening around the world. How does these factor into policy thinking today?
The tariff is a very unique shock to the Singapore economy. So unlike previous episodes of downturn like the global financial crisis or COVID, the tariff does not induce a very abrupt and pronounced pullback in economic activity. Instead, what we see is a very gradual yet sustained changes in the global trade landscape with both long-term and short-term adjustment dynamics and lots of uncertainty during the adjustment process. So monetary policy has to respond insofar as they affect growth and inflation. So for growth, we have to take into account how uncertainty in the short run affects our exports, and also how in the long run the changes in global trade patterns affect the Singapore economy. So for inflation, we have to assess the net impact because the tariff induces both deflationary and inflationary price pressures.
Yeah, we are living in such uncertain times. But I am so grateful to be working alongside both of you, as well as the rest of EPG, to be at the forefront of Singapore's policy making in such a time today. Celine, Su Ping, you have both done this for a really long time, and I've only been here for a year. So to conclude this session, I would love to hear what drives you every day working over the last 2 decades in EPG.
Well, Yan Fei, actually it's more than 2 decades, at least in my case. Well, actually it's just the simple mandate of ensuring low and stable inflation, especially now in such increasingly challenging circumstances. There's something new happening every day that we have to respond to, and that really focuses our minds. I guess we can also think of the impact that we have. Ultimately, it is about the effect of monetary policy on the man in the street. And to quote a colleague, she says she is mindful that behind every monetary policy decision, there are people whose lives we quietly support.
Oh, I think I saw that on the internet as well.
Yes, yes, it's a nice quote, right? It is important that we know what our effect is on the everyday lives of Singaporeans, whether they are at the hawker centre, whether they are at the supermarket or on public transport. So keeping inflation low and stable, and through that, supporting economic growth is really critical work.
What about you, Su Ping?
I must say that after more than 2 decades in this job, there's still something new for me to learn on the global economy and Singapore's economy every day. I would like to share a quote from this book called Good Economics for Hard Times.
I love that book.
Yeah, by Nobel laureates Abhijit Banerjee and Esther Duflo. The quote says, "The best economics is frequently the least strident. The world is a complicated and uncertain place, and the most valuable things economists have to share is not the conclusion, but the path they took to reach them."
That is a very useful reminder, Su Ping. Thank you, Celine and Su Ping, for your time today.
Thank you.
Thank you.
Monetary policy is definitely not just an economic tool. It affects all of us quite directly. We've come to the end of the first episode of the Inside MAS podcast. Stay tuned for more episodes.